Good afternoon, everyone. Today's Tuesday, April the 9th. It is 12:46 Central, and that is fairly late in the afternoon. We'll be watching to see what the 2:30 reversal does Eastern Time. But right now we are at a decision zone here, taking a look at our futures in 5 that we normally do. That's to do midday report today. So we'll look at it and see how it extends into the afternoon. We do have earnings releases starting to come down the pike. They are affecting things in general, but what we have to do is figure out, hey, are we going to actually hold this 2880? In the last 2 days, we've risen and then rejected the region, pulled all the way back, took every bit of the move with us, and we've done that again today. These things are relative warning signals. They put us into one of two places: a potential channel event that gets us at support and at resistance, locking us into a range, or it's a first signal of a breakdown. What's the best way to trade a breakdown? A failed retest of support. And so far, we're sitting on top of those support edges. They don't look lovely, but we are still sitting on top of them with stops that are about 4 to 5 points wide, and that would be right around here. If we fade, bounce, and don't hold the level, or for some reason we have a piece of news that dramatically moves the charts deeply, remember, because we are in a bullish pressure event, the first thing we're going to see are buyers coming into the mix. And so if you are being tentative, saying to yourself, well, I don't know if this is a breakdown, I don't know, and you come in late at the bottom, that's going to be bad. I'm just saying. It is. It's going to be bad. You don't want to do that. Why? Look at what the wicks are doing. All the big wicks that we have going up this trail tell us the buyers are at the bottom of them. So you definitely don't want to short at the bottom of them. You want to short where people stop buying, and that's old sport. Do I expect us to bounce a bit? Yes, especially coming around to 230 reversal. We have companies that are releasing, all kinds of things going on. This is earnings season, and we could see all kinds of things happen, right? But the number one thing to realize is if you miss the short because of the breakdown up here and you wait for it to come down here and you go, oh, okay, well, it's not bouncing. Well, it's not fading either. So you want to be very, very careful shorting. There's a lot of positive momentum still sitting underneath these charts. NQ, same sort of thing, moved up a little bit, moved up into the 30 area, and that was yesterday, I believe, and now it's failed the retest and having a bit of trouble. My thought is that it heads down into 75.80, 75.81, and it should see some measure of bounce right around that zone. If it fails, you're going to see buyers come in lower first, right? What it's got to do is head up, reverse all the movement, head up, reverse all the movement. It's still holding that movement. So if it moves up again and reverses all of this movement, with this momentum, it still should bounce. Doesn't mean it won't head lower. It just won't stay lower. And that's really what we have to figure out. What is this chart up to? My thought remains the same. Ever since January, I've been thinking, we're just going to come right back and sit in heavy congestion until the end of the summer. I don't know what catalysts we're going to have to do other things at this juncture because, I mean, things are slowing. And so slow action means there's no catalyst for upside motion. There's also no catalyst to downside motion. It's not like we're in a recession. It's not like things are going off the rails. It's just not as great as it was. And so not as great as it was means that you go sideways, right? Or at least this is my supposition. And so my supposition says, hey, this is a big motion. So sideways action will bring us down here and we'll chop around in this great big range. It'll feel like a ton of motion when really it'll be nothing. That being said, what are we doing right now? This is our 82 level where I suspect we fade into. I think we bounced a little bit too early this morning. We need to watch these fangs, folks. Stop thinking that they're going to go up and up and up and up and up. We need to be very careful. If we wait for the fades to buy them, we should be all right, just so long as we take money at resistance, right? That is the better thing to do at this juncture. That's my thought, right? So rather than buying breakouts thinking, hey, this is going to run away, no, it's not going to. It simply is not. It does not possess that kind of momentum. Not right now. There are stocks that are doing that, but momentum-wise, you're going to have to become a stock picker. And I would say, IBD, great for that. If you have Street Smart Edge with Schwab, great for that. CMLZ Viz, CML Viz, excuse me, that's great for that. Those three tools are really your best bet for stock picking. Broad market action, they're going to use it to hedge. And so if you're looking at your stock and it starts breaking out, it better be something that doesn't follow the natural path of the market most of the time, because it is going to get pulled down. So you look for support action to go long, you look for resistance action to go short. All right, this been crowding around here all morning, not breaking down, not lifting out. Going to get caught in the space. It felt like a stone this morning. I looked for news, couldn't see any, determined from that it was technical selling, and assumed because it was technical selling that technical selling would stop selling and turn into technical buying, at which point we saw just that, the stopping of the selling. We just haven't seen a ton of buying, and that is a warning, right? You want to be careful, right? It should be lifting. It should be lifting if it's technical, and it could into the afternoon. Where should it stop? Old support, new resistance. That's where it should stop. If it goes up a little bit and fades, it's got the downside motion again, but we've got pretty good negative drift, and this has been technically divergent for days. We've talked about it for days and days, and then yesterday and today, it's come to roost. So what do we expect? A bounce that fails. We're probably going to sit right in between these two moving averages for a little bit. Oil, another one, 64.84 is what I had in the blog for our final target when I give these big targets for us to stair step through when we're working. Problem is it came, a few pennies short of that. So we didn't quite get that target. But to me, that means there's a shot. Now here's a problem, folks. Here, fine. Up to here, all technically divergent. It's technically divergent on the daily. It's technically divergent on the 4-hour. It's technically divergent on the 30-minute. There's a ton of technical divergence in here. It could easily fade sharply. Now, is this chart still very bullish? Yes. Where was the last time we had old support, new resistance, or old resistance, new support? It's right around here. That's 62 to 61.80. That's far from where we are right now, and easily it could fade. Easily it could fade. Right now, it's bouncing off of our 63.70 area. That actually is 63.95. So we'll lift that one a bit. But if we bounce higher again, this chart looks very, very likely to collapse. Very likely. It just needs to take a breather. Okay, and so ton of congestion all the way up to 65.20, and then it could do that with the EIA and the API this afternoon, but we're going to watch this one very carefully because this is long in the tooth. It really is. Gold, this moving average is the 100 Kaufman Adaptive, and we've got resistance here, but moving averages don't give us the real levels, right? Moving average doesn't mean anything except giving us relative movement of trend. And if you and I are looking at this, I mean, we're not going to have fun on a roller coaster that looks like this. This looks like a regular street. There's nothing fun here. It's all sideways. And so that's what our chart's likely to do. Resistance, back to support, back to resistance. The big thing is, what's the dollar doing? That could certainly affect. The dollar's been dipping a bit. So we have to watch for that. But, this is a clear resistance zone. This was a big elevator shaft. We went up here, rejected, moved up again. I would not be surprised if we came back into 1304, 1306. Well, we've already done that once here, but in a nice wave that allows us to position ourselves for one more ride to the upside where we'll try and congest in this motion. If we don't, I would find that to be unusual, but if we don't, what would happen is we would come into this level, bounce a little bit, but not get up over here. And that could also give us a shorting mechanic, but you want to use a failed retest for that. Okay, that's my opinion. I use failed retests and positive retests when slope action is not strong. And we haven't had good slope action for 6 months. Okay, so that's really what we do now. You get good slope action, the game's totally different. But right now, when slope action is bleh, then this is what we do. All right. See you all tomorrow.